What's up, YouTube? Today we're going to talk about something super important. But first, I do want to congratulate my team for making an awesome Saturday on a cold, rainy November Saturday. They had a great sales day. What, three, four cars? Four cars today. So awesome production. Good job, guys. So I want to talk, which leads me to talk about this next thing. Some of the deals were financed, some weren't. This leads me to want to talk about financing in today's market, and more importantly, with financing credit and what banks are looking for with credit. So I want to bring that up so that we can actually do a tutorial on how to gain good credit, how to get a good interest rate, how to go through the right lenders, what it looks like to work with a dealer, what it looks like to go through the approval process with a dealer. And for that, I brought in an awesome guest, our finance manager, Brendan.
Hey.
Brendan sees all the applications that come through. He sees 150 applications a month. So he sees 150 applications a month, 400 plus leads a month. And this guy knows a thing or two about what it's like to get great credit, great financing, great interest rates, and how to work with banks the best way possible.
Yeah,
so
definitely.
So we're gonna have a nice chill little talk about this, and we're gonna take a seat over here at the desk. So boom. Here we are in the showroom. Let's see if this actually works. I'm using my gimbal, which is a stabilizing device for filming. And boom.
There we go. Perfect.
Awesome. Okay. So this is kind of a weird way of doing this, but I'm going to kind of interview you a little bit. So first and foremost, people always, what's one of the most common questions? Probably what best interest rate is we can get.
Yeah, what's the best interest rate you're getting? If they need any money down, those are typically the first two questions that I'm asked. Yeah.
Cool. So what do interest rates look like right now, and how does a customer get a good interest rate?
Yeah. So that's a very good question. So good interest rates right now that I'm seeing from some of our top lenders. Of course, we're in Oregon, so one of our top lenders is Oregon State Credit Union. They've been really aggressive the last month and a half.
What's that mean when a bank's aggressive or a credit union's aggressive?
It means that they're changing their interest rates, so they're giving better interest rates out. They're trying to, but one good thing
they want more loans, right?
They want more loans.
They want better loans. They want better customers, so they're gonna lower their things to incentivize people, right?
Incentivize people, have them come in. Yeah, we're getting a 6.64 with Oregon State Credit Union right now, which is really good for A+ tier credit. I don't have very many lenders that are giving 6 and under, so for them to kind of step up to the plate and start offering that over the last 2 months, it's been really great. Some other lenders, again, A+ tier credit, you're probably talking 720 plus, 730, 720 plus. You guys getting 7.99, 8.99, things like that. But yeah, some of our top lenders do give out really good aggressive rates. They're constantly changing too. Every couple months, they're either going up or down. So, and yeah, and then as far as down payments, typically, I've been seeing at least 1,000 to 1,500 down is really kind of their sweet spot right now.
Is that because of book changes and market value changes?
Yeah, book changes, market value changes. That's been happening a lot lately. We've been seeing, books kind of, go down a little bit. But again, you talked about this in one of your last videos. It's more going back to normal.
Yeah.
Kind of, what it normally used to. This is normal, So just getting back into that groove of the market.
So yeah, and something with the book value changes and something that Brendan deals with a lot. So dealers, so it's a really controversial thing. You guys always see shorts on TikTok and people talk about, oh, dealers can't ask you for a down payment, so on and so forth. I don't know if you've ever seen those before. So there's a lot of misinformation videos. Yes, you're kind of correct that a dealer doesn't necessarily have to ask for a down payment, but it depends on what the vehicle is being sold for and what the dealer can actually allow the vehicle to be sold for, depending on what the dealer's cost is. Exactly. So you'll see a lot of misinformation where people are like, a dealer can't demand a down payment. Well, it's not the dealer really demanding it. It's the bank saying how much they're going to give the customer in a dollar amount to buy a vehicle. The loan to value, right? And the thing is, especially over the last couple of years, vehicles have all been selling over their true value amount. So banks have been allowing more money to be lended to the customer to purchase a vehicle. So say you have a car and the book value is $5,000.
Yeah.
Or we'll do 10 grand just to make it an easier number. So the car is $10,000 and its value is $8,000. Its Kelley Blue Book value is $8,000 for the lenders.
Depending on where your credit may fall, you may need a down payment, you may not need a down
Exactly.
payment.
So A-tier credit, they will give you 100 to 130% of lending value. So 130% of 10,000 or of 8,000 is 10% of 8 is 800, 816. So they'll let you go 2,400 over that eight. So when you have an A-tier credit and the vehicle only books for $8,000, if they give you 30% extra, that means they're giving you an additional $2,400 to purchase that car. That's $10,000. So the next question comes, well, I'm financing a car for $10,000. It's only worth $8,000. Why would I even buy it, or how can a dealer sell that for $10,000? Chances are in this market, the dealer paid $9,500 or $9,000 for it, and maybe they had it at $11,000 and they discounted down to $10,000. Well, the dealer can, I guess, go down to $8,000 to sell that person the vehicle for the quote unquote lending value, but lending value and market value are two different things. So depending on what the vehicles are worth, like us, when we price our cars, we price to market value.
We do.
I can't price to book value because book value is so arbitrary at this point. A lot of times it's correct. A lot of times book value is correct. A lot of times it isn't. We have a lot of cars that are $500 to $1,500 over lending value for Kelley Blue Book,
which is pretty typical.
Which is typical, yeah, $500 to $1,500. So the bank, if you want a loan on that car, and if your credit isn't A+ tier or platinum tier to where you can get that overage for that loan, the bank's going to say, hey, we're only going to give you $8,000 to loan on that $10,000 car. Well, the dealer has to make their markup or whatever they're charging. So they're going to come in and say, hey, we need $500 to $1,500 down to make that happen. Which you don't have to buy the car, right? You don't have to finance it. You don't have to say yes to that. No pressure on our side, right? That's just how the deal works, and it works the exact same way if you're buying a house, if you're buying a boat, if you're buying an RV, if you're buying, go get a mortgage. Whatever the appraised value is, the appraised value, and if the house doesn't appraise for enough, you're coming up with $10,000, $20,000, $30,000 out of pocket to buy that house, and if you can't buy it, don't buy it, right?
Yep, exactly.
So let's talk about this. I talked about this in my last video too. I've been seeing a lot of repos. Brendan's been telling me we've had a lot of customers, a lot of repos. We've actually had a couple of repos ourselves on a couple of our own accounts. How many repos do you think? So if you're taking in 150 credit apps, how many repossessions on those people's? First and foremost, how many people are under a 600 credit score out of those 150?
The majority of them, I'd say at least 100 to 120 maybe.
Are around 600 or less.
Yeah, 550 and up. Yeah, 600 and less to 550. Yeah.
And how many of those people do you think are, say you have 100 people with under 600 credit score, how many repos on those reports? Probably 20, 30 repos?
At least 20 or 30, yeah, which is a little bit higher than I typically have seen. So I have been seeing a lot more repos as of recently. A lot of people are bringing in their trades that they're getting ready to be repoed, just trying to, get out of it. So yeah, that's been happening a lot more recently.
So that's a tricky situation, right? So people are behind on their payments, and instead of letting the car get repoed, they're trying to offload it onto a dealer and get finance for another car. How's that work out usually? Does that mean
it usually doesn't work out? It's very rare that the numbers, because we're a business, so if the numbers make sense, awesome. If they don't, then that's fine as well too. So,
and banks sometimes won't lend to them, right? Because the bank will go, hey, because why are they getting repoed?
The bank, all on their credit. It sees that they're 90 days past due, and so again, coming to the well, now you're a little bit more of a risk, so we're going to ask for a little bit more down from you. In their eyes, is talking from a credit union standpoint. So every little thing does affect it. There's so many different angles that you can come in at, and every single angle affects it drastically. So now moving forward of how you can make your credit better, or be able to come into a dealership and actually understand what's going on, and not just, hey, I want this car, I like this car, let's look at this car. We're try to be as realistic as possible. If somebody comes in and they look at one of the sports cars, I'll hand you keys, I'll let you go check it out. But when you come back to my desk after I've looked at everything, I may say, hey, here's where you're at, and here's where we're at. I have these 10 cars that I know I can get you approved on. It might not be your first choice, but I do have 10 other choices for you here. We have options. And that's one thing I love about our lot is we constantly are having options for everybody of all different types of credit tiers to come in and look at, whether that's new credit, bad credit, fresh credit, or somebody that has a fully established credit at an 850. We've got all sorts of different types of cars and varieties of things, and that's one thing that we get complimented on a lot, is our variety of vehicles that we have here.
Yeah, we have a super big variety.
We do.
And something that's huge as well. Me and Brendan were talking about this. I actually had to repo a car that I lended out. Sometimes, if the numbers make sense, sometimes I'll loan someone a car or give someone a loan on a car with my own money, because they can't get financed somewhere else. And so far, it hasn't really worked out for me very much. I'm probably never doing it again.
Yeah.
But I did have to recently do a repossession. And the hard thing is, and that's what's called a buy here, pay here account, which I don't like doing. You have to charge a very high interest rate. It doesn't usually work out for everyone involved. I don't like repossessing a car. It hurts. It's not fun. I don't like doing it, especially since I'm very personal with my customers. We all are.
Yeah.
But if the funny thing is, the worst thing you can do if you're trying to help your credit, and say you have normal lenders, whether it's a buy here, pay here, or a bank or a credit union, the worst thing you can do is to fall out of contact with them. Yeah. So keep communication with your lenders. If my person, I would have never repoed that car if they would have just stayed in contact with me better, and if they would have tried to pay something. If they would have called me and said, hey, I'll give you $50 this week, that's all I got. And if they would have just called me or texted me, I probably would have never pulled the car and repoed it. Now you can't do that with a bank. You need to make your payments with banks and credit unions. But the worst thing you can do is not call them. So if you're ever falling to a point of contention and you don't have the credit or the money to keep going, you need to call your lender as soon as you can and make payment plans with them. Say, hey, I need the car for work. I can't afford the payment. Can we do a payment plan? Try to work something out and communicate, because that's way better than hiding. So never hide.
They'll always find you.
They always find you anyway.
Find you one way or another.
And then your credit gets hit. So what would be? We've actually had some great borrowers this week. We've had some great.
Phenomenal.
So it's a really weird wave. It's a weird wave. You'll get a lot of people that have really low credit that can't get financed at all. Then it'll go up in waves where you get a lot of people with great credit, and it goes back and forth. It really just kind of depends.
Over the last 3 days, I think we've had 3 or 4 customers that
800 plus,
huh? Plus, mid eights,
So it all comes in different shapes and sizes. What do you think is the number one thing you see people defaulting on their credit? Is it cell phones, credit cards, college loans? I mean, what's the number one thing you see kind of like getting hit?
I don't see as many college loans as I thought I would when I first started doing it. But I do see a lot of small delinquencies even. I mean, there's people that come in that don't necessarily have a bad credit score, but they forgot to pay Fingerhut, or something small. And those small things, when you don't have anything on your credit, that does affect your credit a lot.
Death by 1,000 cuts. So exactly. It's not like you're seeing $10,000 credit cards not being paid. It's like $200 like Verizon bills.
Exactly. A lot of Verizon, a lot of AT&T, a lot of
power bills, electric bills,
weird credit card stuff like Best Buy or things like that, Best Buy cards and other places like that. And then you start getting a lot of those and say, hey, maybe you're not delinquent on them, but now you have a lot of cards, and so now your debt to income ratio is now higher. So you have
let's go into that. Yep. So that's my next topic. So what's debt to income?
So debt to income ratio, it's so you make X amount of money every single month, right? So and then you've got your bills that you have to pay. You have your car bill, you have your car insurance, you have your rent that you have to pay, and anything else, your utilities, things like that. They literally think about all those things when we submit somebody, and that's another reason why it's so important to be honest about your monthly income that you make, because you could tell me something and I go and submit it, and then I'm asking for your pay stubs, and hey, you didn't tell me that you just recently took a vacation and you took 3 weeks off. Well, that's going to affect the numbers that I'm working with. So that's a side note, but always make sure, when you're going and working with a finance company for whatever reason it is, whether that's a house or car, whatever it is.
Find out the truth.
Yeah, we always can see it. Once we get new credit pulled and everything, I do see the full profile. So it's always good to be upfront and honest. And some lenders, they do listen to a story. So some of them, I can say, hey, this is why this is like this. But if you're not honest with me, and I can't explain that, then, and I don't have that in my back pocket, chances are it turn into a decline pretty fast. So, but to get back on topic on the debt to income ratios,
It's called DTI.
yeah,
DTI,
debt to income. So they look at, like I was saying, all your monthly bills, and then so you make X amount, and then they just deduct all of it, all those credit cards that you've racked up, those little, $50 a month, $20 a month, $70 a month. Every little thing they add up and they calculate, and there's a certain sweet spot that if it's over that income, well, again, you're going to need either more money down or possibly even a cosigner at that point for more income. So yeah, that's something I've actually been seeing a lot more of as of recently, more than repos, more than other things.
People overextending their credit, bunch of tiny payments, $25 a month, $40 a month,
yeah,
$30 a month, $100 a month. Yeah.
Then you throw in the student loan or occasional educational loan in there, and now you can't
bill.
Exactly, and again, there's so many different avenues. I mean, say you're on a loan, you get married, you get divorced, and you're separated. It's been 5 years, but that loan for that house is still in your name. It still calculates in your monthly. I actually had a gentleman today. He pays $1,500 a month in rent, and he also has a mortgage from 6 years ago that shows $1,900.
He doesn't live in the house,
and he doesn't even live in the house. Thankfully,
again, the person's new husband lives in the house. This guy can't get finance.
Exactly. Well, and that's what happened, and that's one reason why I love working with some of the companies that we work with is I was able to send it to a company. Again, there's a story behind everything. So I actually was able to get him approved. Typically, I probably
depend on income,
depending on so many different factors again. But we were able to get him approved today. We were able to get him a really, really good rate, even though he was in that situation. So again, being honest, telling your story, telling what's up front, it might not always work, but hey, I'd rather have somebody be honest with me than find out 10 minutes later once I pull their credit and then I can't do anything about it.
Yeah. And so a healthy DTI or debt to income is 60% or lower.
Yes.
So 60%, if you make $1,000 a month, say they go off gross, not net, so before taxes.
Yep.
So DTI, they typically go, if it's over 60%, most lenders will not lend at all. Right now, it's a little bit tighter. They're looking at 40-50%, right?
Yeah.
So 60%. So if you make $1,000 a month and you have $600 of bills that are on your credit report, now it doesn't count bills that are off your credit report,
right?
Other than rent or mortgage. But if you're at $600 a month of bills with $1,000 a month of income, they're not going to finance you. They need to see that you have something called disposable income. And banks even think about this. They go, hey, is there a warranty on the car? We're going to add a warranty.
They do.
And why does it matter if you're adding a warranty on a finance deal? Some banks, especially subprime banks, they would rather give a loan to a car. And this is weird. It's usually more on the higher risk loans, not on credit. Credit unions don't do this as much. It's more on the higher risk stuff, higher interest. If you make $2,000 a month, if you're at like 60-65% debt to income by the time you get that loan, sometimes the higher credit people will actually be happier to give you the loan if you get a warranty sometimes, because they know that, hey, if you're spending 70% of your income on debt, say the transmission goes out next week, how are you going to pay for the transmission if you're spending 70% of your income just to cover everything in your life?
Chances are you don't have the savings.
And then if you have savings to pay for the transmission, you're going to make your car payment.
Probably not.
A lot of times, no. You should. You should still make your car payment.
You still should, no matter what.
Yeah.
Always, again, communication. Give them a call. Let them know what's happening.
Yeah, exactly. Hey, transmission went out. I'm still going to make my payment this month, but can you give me an extra loan to pay for the transmission? I mean, that is a thing that happens. We see people doing that. My gimbal is freaking out, bro. It's freaking out. Freaking out. There we go. Okay. All right.
Perfect.
So that's something too. It's keep in mind your DTI. People will come in. We've had people, and income's not always. Well, we have people with $12,000 a month of income. I've sat down with guys. They show me a $15,000 monthly check, but they have $13,000 a month in bills. Yeah. And like, I can't get them approved. They're like, I make $15,000 a month. I'm like, dude, you take home like $4.
I've had that happen with $20K a month.
I've had people $40K.
There was one with 40.
We had a gentleman a month ago made $40,000 a month, and he had like $38,000 in bills because he had the 7 car payments and 3 mortgages that didn't have rents on them, and it is just a mess. And we couldn't. It was like an $8,000 car we couldn't finance them for. So Yeah.
They look at so many different things. Again, so
Yeah.
many different angles. That's why it's always good to ask questions too. If you go into a dealership and you're not sure, ask questions. They'd love to answer them for you. Any good dealer would love to educate their customers.
I always try to. I'm not
Yeah.
a financial agent anymore. I don't educate. I like to. I'm not someone that can legally train you on finances.
Right.
So please
Yep, neither am
understand
I.
that.
Yeah.
I'm not licensed for any of that, but I do love trying to educate as much as
Yes.
I can. I've sat
Yeah.
down with customers and recommended things on their credit report for them to address, and they come back 6 months later and buy a car from us.
Yep. Refinancing is always an
and then,
option if
you
you're
know,
in a bad spot
you need a car
currently
that
and you need a car and the interest rate's a little bit higher than what you're wanting.
But you have a game plan.
But you have a
behind it.
game plan as long
Yeah.
as you that we talk
yeah.
about that all the time. Having a game plan. As long as you have a game plan, say, hey, look, I'm not going to keep this at 24.99%. I'm going to pay my bills in 4 to 6 months. I'm going to call in and I'm going to refinance, and then I'm going to rinse and repeat and do that every 4 to 6 months until I'm at a good spot for myself.
Yeah, I had a gal come in the other night. She's 19 or 20 years
Yeah.
old, fresh credit, fresh job. She actually didn't have anything bad on her credit. She just was what we call a ghost.
Yeah.
She just had nothing on there. She really needed a car. I couldn't get any other lender to pick her up. I tried every other avenue. I got her a car that was like $3,000 or $4,000, so it was a very low priced car. But we got her financed at a high rate. I didn't like it. It was like 19 or 29% or something. And I told her point blank, and I don't know a lot of dealers that will tell this to their customer. I looked at her. I said, I would never recommend for you to ever take this interest rate. I told her, she's like 19, 20. I said, do not get comfortable with the 29% interest rate. You should not even be taking this interest rate. I said, she's like, well, I need a car. And I'm like, I know that. I said, so you need to pay this. Her payment was still low. Her payment was like $115 a month or something like that. It was very low payment, so it was affordable, and she was going to pay double the payment. So if you're paying a high interest rate, try to pay at least $50 to $100 more a month on that payment if you can, to defeat the interest and pay more towards the principal. And I told her that, and she's going to. So she won't even pay that 29%. She's going to pay probably like 9% or 11% once she pays the added amount on the interest. But I told her point blank, I said, do not get stuck in this loop of 30% interest loans. Have a game plan and a goal. I said, what is your goal? She's like, to refinance in 6 months and be below 10%. I go, good. How are you going to do that? She said she's going to make larger payments, go open up a secured credit card and get her credit up and get it down. I said, good, perfect. It's okay if you're in a spot in life and you have to take a higher interest loan. I've borrowed money on way higher interest than I've ever wanted. I've gone in debt more than I've ever wanted, but there was a goal behind it. Hey, I'm not going to keep doing this. I'm going to have a goal and get out of this in 6 months to a year, work harder if I have to work harder, whatever I need to do, because I don't want to be used to this. So, and we understand people think dealers are predatory because we try to give you a 30% interest loan.
No,
we don't decide that.
Yeah.
We don't decide
we
what the
don't.
loan percentage
Yeah.
is. We go off your credit.
Yeah.
Your credit was your decisions and your actions.
Yes.
So we accept that reality, and then we try to coach you to a better place the best we can without being professional financial licensed people. So we try to just give advice the best we can. Which is awesome. I love that we do that. Brandon's a big fighter, man.
I am.
When people are having credit or their husband divorced them and their kids are sick and medical bills are high,
single moms,
he fights
single
to get them a
dads.
car, man, and then we give them an action plan the best we can. Say, hey,
I do.
Go
and I'll fight. I'll call back and forth. I'll call 3-4 different places, to get the approval, to get you the best rate, to get you the best, the best options. That's I love doing what I do.
He's not commissioned.
No.
People sitting there fighting to get this amount.
Not at all.
This is like, hey, you need a car, let's get you a car.
Exactly. It lets me focus more on their wants and needs, and I'm not thinking about what I'm making and what I want, what I need at that time. I'm focusing on what's in front of me and what I can do to help this person. Cars are, I've heard you and Jaden talk about this all the time, is cars are very important. Like, that's how you get to your work. That's how you get your kids to school. That's how you make your income. I mean, cars are, people forget exactly how important, especially in this country, how important cars are and vehicles are to have, and a reliable one at that, not just to get you from point A to point B. Something that's going to occasionally go take a beach trip, go do this. Like, that's how you can go and relax, go out in nature. There's so many things that you can do with a vehicle. And people forget that, so.
Yeah, exactly. So pick your dealer that you go to very well. Look at Google reviews. Look at everything you can to make sure you're going to a good dealer, someone that's going to tell you the truth and be honest with you. Get a pre-sale inspection anytime you go purchase a car. Pay attention to your credit. Seek advice from financial professionals on how to fix your credit. Don't just sit there and think that you have to accept your credit score. Turn it around. It's just making payments back to people the best you can, and it is worth it to do it. It is worth it to get out of that hole. If it takes you a year, 2 years, 5 years, I don't care. Do your best to get yourself out of that hole. Pick up an extra job, pick up an extra something. Don't get comfortable with that bad interest, because then you will be you'll be getting taken advantage of. But sadly, it's kind of by your own doing. I mean, you choose to be in that credit tier bracket. Things happen. Banks actually are kind of forgiving with student loans and medical bills.
They are.
It's weird. If you see the bank sees a student loan or medical bill, I mean, you've had tons of times where
I have.
The credit unions don't care.
They don't necessarily care as much at that. I have had instances where, I mean, that was all that was on there, was like a page of it. In that case, they did care. But I mean, if you just got a couple of them on there, for the most part, they look past any of that stuff. So yeah,
which is pretty nice.
Yep, it is.
Well, what do you think is a good goal credit score for people to get to actually get like B+ to A tier? Like where's that land?
670.
670?
670, 650 to 670, preferably more 670, but I think that's a good spot where a lot of people should be able to get to, as long as you're doing what needs to be done. Paying what, don't overextend yourself in any way. If you can't make the payment, don't do it. So yeah, just again, don't overextend yourself. You'll be fine. Just keep paying your payments.
And always shop out your insurance.
Always.
Make sure you can afford the insurance.
There's so many different insurance companies. I'd call at least 10 before you make a decision. That might seem high, but I'd at least call 10. You'd be surprised. Most of them you can do online.
Quote online while you're sitting there in the dealership.
Yeah, there's some companies that you could put in your information, and they'll have 10 different companies options for you, so you can just scroll through and see the different options that they offer, insurance brokers. So yeah.
Awesome, man.
That's right.
Anything you want to say?
No, yeah, just appreciate everybody that's subscribed to the channel, watching our content. We're gonna do more longer videos, more educational videos, more things like that. I'm just glad to be here along for the ride. So yeah, I'm sure I'll see you guys again very soon. We've got lots to share and lots to do. So
be sure to ask if you have any questions about credit or financing a car. Put it in the comments.
Yeah, put it in the comments. We'll answer.
Put it in the comments, and you can find us on our social media on on Facebook. Send us a message on our Facebook.
Yeah.
And we're happy to. We have customers calling us from 5 years ago, going, "Hey guys, I bought a car from you 5 years ago. Just wondering if you think I should buy this Tacoma I found out in Texas." I mean, we get people from almost a decade ago asking for our opinion to help with. And I have a dealer out in North Carolina, or not even a customer. He's looking at dealerships. He's a guy in one of my Mercedes forums looking at a Mercedes AMG, and he messaged me off the forum and said, "Hey man, can you run a Carfax for me?"
I was just thinking that.
He's not even a customer of mine, but I'm part of the forum, and we're all cool in there. I'm like, "Yeah, man, I'll run a Carfax."
Make sure you don't get any branded vehicles.
Yeah. We'll run
That's another smart thing, is always check the Carfax or any source. Just as make sure you're not getting yourself into a branded vehicle, or because again, the resell trade value on that, if you accidentally get yourself into something, it'll probably bury you. So
yeah. That's the last thing I do want to talk about real quick: being buried in negative equity. So what happened was, I talked about this in my last video. It's a good one to talk about. So our biggest struggle we're going to come up against, I'm telling you this right now, over the next year. Lots of people way overpaid over the last 3 years for cars because the market inflated so high. Dealers had to pay more, so the customer had to pay more, which means the customer owes more on a loan. How many times are you seeing extreme negative equity right now? Because I've seen a lot to where customers come in, they owe $30,000 on a car that books for $18,000 now.
Yep.
And
that's $20K back. Yeah, I mean,
how do you avoid that? Like, what do you like? No one over the last 3 years really can avoid it because everything inflated.
Exactly. I was going to say the market kind of. Yeah, moving forward. Another thing is again with the extra extension on the loan to value for your credit. They
checking the light. Sorry, there's a green light on that.
Paranoid. If you can get yourself up to that credit tier that I was talking about, like that 670, chances are they'll loan you more than 100% of the book, which in some cases can help, and then always refinance after that. So they can get you, up to 120, 130, and that will eat up some of your negative equity, especially if you're looking at a $15,000, $20,000 car. 30%, you could be looking up to anywhere from $3,000 to $5,000 extra that they will cover just because you have good credit. So if you have,
And this is if you don't have a down payment to pay off the negative
Yes,
equity.
yes,
So negative
and-
equity is when you owe more on your car than it's worth.
Yep. And that always say you've got 5,000 down, but you are 10,000 in negative equity, but your credit's good. You know, hey, we might be able to still get you out of that vehicle. You know, so yeah.
Down payments, and sometimes it might be better selling the car on your own.
Yeah,
We actually,
yeah.
I told all my reps that, hey, if they have too much negative equity, we even offer to sell their car for them
Yes.
to get rid of it, to help get them a higher value out of their car before they buy a new one, or to go on Facebook or Craigslist and sell it themselves.
And
Our goal,
consignments too.
our goal is never to bury. It's called burying
No,
somebody
yeah.
as a dealer name, because they might have $3,000 in negative equity, then they traded on a car that they shouldn't be buying. Then they have $4,000 of negative equity, $7,000 of negative equity.
And
And
it
the year goes
stacks
by,
and stacks.
and the fourth, keep stacking. If you're in a car negative equity and there's nothing wrong with the car, you're too buried in it. Just
stay
keep
in
driving
it.
it. Just
Just-
stay in the
yeah.
car and make bigger payments. If
Exactly.
you can, get a tax return and then pay it down.
Yep.
You know, dude, sometimes it's better than. I've met so many times where people, I can't even talk them out of it. They're like, I don't care if I have $3,000 negative equity. I want that truck out there. They don't even need the truck.
No.
And
Yeah.
I've literally advised, I'm not going to turn down a sell.
Yeah.
I mean, it's bad business. If someone's literally telling me, put me in that car, I don't care, and I need it. I need that truck for work.
Yeah, I
and,
told
and,
you. I warned you.
Yeah, I told you, and I gave you my appraisal.
Yeah.
And I gave you 3 other ways to sell the car, and I gave you every other option. I'm trying to help, but you're still wanting to buy something. We don't pressure people. We're not commission.
Yep.
We're going to take the deal because that's bad business. If we don't, we have to. Yeah, I'm not going to tell a customer no.
Yeah.
More than 3 times.
Exactly.
I mean, however we can help, right?
And we care about our customers a lot.
We don't want you.
Yeah,
Well, if we
yeah.
bury you $7,000 in a car,
Exactly.
you're never going to come back to
Exactly.
us ever again. Like, what's the point? That dealer buried me, and said,
Yep.
"You must not want to work with you ever again."
Yeah.
Like,
Exactly.
you know, we don't want to do that because we want you to be able to come back one day and trade the car in 2 years from now and be happy and get another one, and
Yep.
so on and so forth.
We
So,
love repeat customers.
Yeah.
We see it all the time. That's a big part of every month. There's customers that I hear
from
2 years ago, 3 years ago, 4 years, 7 years ago. I mean, we you know, how long have you guys been doing this now?
7
And
years,
7 years. Yeah, and I do have people that will bring. In fact, a couple months ago, there was 2 customers in the same month who were both from 6-7 years ago. Traded in the same car that they bought, kept it in immaculate condition. That's another thing. If you buy something from a dealer you built a relationship with, keep good care of the car, keep maintenance on the car. Because chances are they're going to give you, if they
Oh,
can,
yeah.
they'll give you more than trade.
Oh,
You know, like, so you know, you're bringing the car back.
Clean your
Yeah.
car before you trade it in,
Yes,
please.
please.
Like, just please go
Please.
clean your car.
A lot of
Like,
dealers out there tell you there's no deduction for.
There is.
There is.
There is.
I mean,
There's a,
yeah.
If I have a car that's coated with that much dog hair, I'm
it's
hitting
gonna
you.
take 10 hours of cleaning. if
Yeah,
not more.
I'm hitting you $300 less on your trade-in because that much dog hair is
Yeah.
possible to out. So anyway, that's just a bunch of rambling.
Yeah.
But
Yeah.
there's our video for tonight. We're gonna have
That's
a ton
right.
more coming out.
That's right.
Here's the showroom. That's the wrong way. Can't use this stupid machine. Nolan's over there on the couch. There's our BMW. Ashland's over there typing away. Say hi, Nolan. Wait.
What's up, YouTube?
So, this
He's
isn't
not even supposed to
YouTube,
be
bro.
here. It's a Saturday. We don't even know why he's here. Anyway, so there's our video on credit. We're gonna have a lot more coming up.
Yes. Yes, we will.
And I hope the mic picked me up the whole time.
Yeah, sorry.
That's okay.
Yeah.